streams is we're going to live trade. We're going to go through fundamentals. I'm going to go through the recession watch, which is something that we've been watching for a few weeks. I'll explain to you guys a bit about my cryptocurrency investments over the last 3 or 4 weeks. And then, yep. All right, I'm going to throw my phone over here, y'all. I haven't streamed in a while. You guys gotta give me a second to get back in the streaming mindset. Okay, but let's go through those reminders. How I trade is I'm an intraday trader. I use the higher time frames in order to find key levels, and then I scale down to the smaller time frames to find entries at the market open. Now, sometimes or most of the time, I don't trade right at the market open, which is in about 10 20 minutes. I usually wait 30 minutes after the market open for the price to settle, for the whipsaws to slow down, and for the market to pick a direction for the day. And I usually look to trade about 30 minutes to 45 minutes after the market opens. Make sense? All right, well, let's start going through some, let's go through a few currency pairs and a few indices. I'm going to do big picture. I'm going to do kind of a 30,000 foot overview, and then I'll show you guys what I'm looking for. So US 30, we're on a bearish trend, highs, lows, lower high, lower low, lower high, lower low, and we're back creating a lower high. As long as we don't break above this previous structural high, the market's still going to drop. And so as we get to about 32,500, this is where I'll be looking to go short on US 30. If the market breaks above and closes above 32,500, then we can wait for a retracement. Okay, it's either going to break back in, retest and drop, or it'll push back up. So at the end of the day, 32,500 is the area I'm looking to short. If we violate that area, then we will come back and reassess the playing field. Very straightforward. Sorry, guys, I do have to post this on Instagram. If there's Chart Addicts, if there's somebody from the core team on here, if you guys can keep posting this on Instagram. Completely forgot to post it.
Roy, can you tag me on it so I can actually repost it, or is there a link for it?
Yeah, I got you.
All right, cool.
All right. So US 30, pretty straightforward. I don't think there's any questions there. Let me show you guys Nasdaq, which is the trade that I trade, which is the pair that I trade the most. So same thing, we have a downtrend. The only difference is this resistance point right here, which I'm going to make in purple. I'm going to change the color. I'm going to put that in purple. This purple zone is a higher time frame weekly resistance. So if I can show you guys this with a bigger time frame view, what I want you guys to pay attention to now, first off, we're extremely low in the market. Okay, when we're looking at prices relatively, this is the high. These are previous lows along the way. And so the market, like relatively speaking, is extremely low. And so at some point, we're going to see a massive retracement up. However, if we're going to look at structure and momentum, the market still has a lot of room to the downside. So here's how we look at this. You guys see this zone here that I just drew was a previous resistance level, resistance level, resistance level, turn support. And now we're below it, looking to retest it as resistance. So I can see us pushing up one more time to about 12,200 before we have a continuation of that trend. So higher time frame, we're sitting right at that level. 12,000 flat or 12,050. That's kind of the area that I'm looking at. Now let's go down to an intraday chart and show you guys how this looks on the smaller time frames. And I'm just trying to do the analysis here before the market opens, just so we can kind of have the idea down, and then I can explain a bunch of other topics later. So inside of this intraday range, it's really straightforward. We have our support down here, the green zone, our resistance up here, which I'm going to put in red, and I'm going to extend in both directions. So it's going to be really easy for us to look at these zones now. Green is support, red is resistance, and purple is neutrality. So as long as price is sitting below neutrality, it's a short. If it's above it, it's a buy. If it's below it, it's a short. Above it, it's a buy. Below it, short. Below it, short. And so while we're still playing in this miniature range right here, on a scalping basis, it's literally just buy the green, sell the purple. You guys got that? Buy the green, sell the purple. So then we go down to the smaller time frames and say, does the smaller time frame price action confirm that short bias? We had a bearish impulsive push from the top of the range to the bottom of the range. Let's measure that most recent impulse and see if we've retraced already. What we can see here is that we formed one top and two tops at the 88.6 retracement. And that's where we'll be looking to take a short entry. So honestly, guys, I'm going to scalp a short entry now. I'm going to make this a higher time frame deal. But I'm going to scalp my first entry before the market opens because we're at the best price. You know, the closer the price is to your entry zone, the more you don't want to hesitate and you want to act on it, because as price pushes away from your entry, you're going to be forced to take a worse entry, however many points away from your original target or your original, price entry. So while it's sitting at that 88.6 or 78.6, that's one of your lowest risk chances to get into the trade. And so I like to take advantage of those. Now understand it is a little bit more risky to trade before the market open. And so for most of you, what you'll be doing is waiting for the market open, perhaps waiting for the spike up to 12,077 and then shorting at 12,077. That is going to be the lowest risk entry at 12,077. So if you guys have a smaller account, you'd want to wait for that prime entry and that whipsaw at the market open. However, if you're looking to scale into this trade, this is going to be the first place you scale. And then if the market retraces at the open, you can enter more positions at the top. And then as the market breaks under, all of your positions are going to be in profit. So it's the difference between an early entry and a more conservative entry where you're waiting a little bit longer. The risk to reward on this is not that attractive. It's less than 1.5 to 1. It's about 1.4 to 1. That's why waiting for that retracement up can reduce your risk and increase your reward and give us a 3 to 1. And so this is actually pretty interesting to kind of put those side by side. The entry right here is 1.5 to 1. Waiting for the retest is a 3 to 1. The reason that most people don't get the 3 to 1 trades is because nobody wants to wait for that entry. And if the market leaves without them, they start to panic and short late in the trend. So to get the best risk and reward, you either get this top entry or you don't get any entry. If you're looking to just be in the trade and you'll accept the 1.5 to 1 risk and reward, then you'll start to scale in here. If the market does retrace, you'll enter another position and then try to ride this thing all the way down. Does this make sense, or am I speaking alien languages? Does this make sense to everybody? Everybody on the Zoom, everybody on YouTube, am I speaking English?
Español, por favor.
Un poquito, okay? Un poquito.
Es que...
Is it como se dice downtrend? You feel me?
Yeah.
I'm getting there. I've been in Miami for 3 weeks. I can already get my Spanish down just a little
Hell
bit.
Yeah, you should be.
Come on, bro. Said, yes, sir. Perfect English. Makes sense. All right. I mean, YouTube is jumping. People on YouTube, are you guys alive? You guys have a pulse? Bro, if you guys have one trading friend, if you guys are in a trading group, go and copy the link. Go and copy this link for YouTube and paste it in your chats and say, look, this guy's about to start trading live for free. For free. If you guys have been on a stream before, you know it's guaranteed money. All right. We don't like to make guarantees, but just know I'm going to catch a trade. If it doesn't retrace up here and we don't catch the short, and oh no, what it's going to happen? We're going to catch the long position from down here at the market open. Whatever happens from here, people, we are about to make money. So get excited about it. Take this motherfucking link and go ahead and send it to your friends. Send it to your trading group. Go ahead and tell your mentor to go and learn a thing or two and get his notepad out. You feel me? Go ahead and send this thing out to as many people as you can. Let's go ahead and start making some money. If this is your first time on the stream, let me introduce myself. My name is Roy Dunya. I'm the co-founder and CEO of this beautiful place called Chart Addicts, and we are the #1 personal coaching service in the world for traders. All right. Yeah, this thing's going to continue to short to the downside. So I did not enter the trade. Just for those of you guys that are wondering, I did not actually end up entering the trade.
What are your thoughts on gold?
So I was looking at this on the daily, and you see this giant supply zone right here at 1875.
Okay.
So anything below it was shorts, but now price is sitting at this institutional buy zone, and gold loves these fucking levels where it buys up like this. So there's obviously a resistance up here, but then there's also this support down here. You see it?
I see it.
And price on gold, it loves to hang out at these zones, but we've already had a closure below. As long as this daily closure closes below the zone, and that level is 1850, we can come up and retrace 1850 and keep dropping, or we're going to break back in, and I think we're going to range between 1850 and 1866. Now, bullish trend, flag retracement. So we really could push up a little bit. Give me one sec. Yeah, today's candle is really important. If we stay below 1850, I would just be looking for shorts. So get down to the smaller time frame. Do top, bottom on this. The short would kind of look like this, even though I'm not a big breakout trader. The short would look like this. Pull back retracement to 1850. If it breaks above this structural high, then it's going to go up to 1867. So that's when I would just get out of the trade. And then TP1 is the previous low at 40. TP2 is the extension.
I have a buy limit at 40.
The buy limit at 40 makes a lot of sense. Yeah, that's one thing I always used to get burned on with gold is these structural levels, where like on the daily, you're like, oh, we're at a massive institutional short level. You see this? Massive drop right off these two black lines. When we're above it, it's support. But when we're below it, massive drop to the downside. When we're below it, massive drop to the downside. When we're above it, it's a buy. Above it, it's a buy. Below it, I think we have a lot of room to the downside.
Okay.
But it's all about the candle closures. I don't like to guess too much with gold. If it closes above, okay, it's going to keep ranging. If it closes below, we're headed all the way down to like maybe 1790.
I agree.
Fuck yeah. The one thing I do see on gold, this is like the last kind of thing I'll say, is that, you know, we had this massive consolidation. It's the same thing that's happening on GJ now. I'll show you guys. We had the massive break, it came down double bottom retest of the highs. It kind of made it look like it was going to go bullish, but then it dropped below. So, you know, like when I draw my consolidation zones, I have my support, resistance, and neutrality, right? There's
Right.
resistance. There's support. And then neutrality is somewhere right in the middle. Probably where this support is. Yep, right there.
I think you see where you have your resistance here. I think prices can reach up to that area and then drop.
Like a double top.
Yeah. Yeah.
Oh yeah, that would be awesome. Yeah, but until it breaks back above that buy zone where you see this right there.
That makes a lot of sense.
So that's why I'm saying, because you see the support right here form. When it's above it, it's going to push up. See the support right here form? When it's above it, it's going to push up. But when it's below it, we have a pretty consistent move to the downside.
That makes sense. Thank you.
My guy. I should be asking you about gold, but I don't know what the hell I'm doing. I saw a bunch of colors on the screen and maybe it went up, maybe it didn't go up. I don't know. It's gold.
Hey man, I'm always up to different opinions, so you know me.
We stay coachable.
Yes, sir.
Coachable. Oh, speaking of coaching, we are launching the advanced coaching program. Some of you guys might have heard about it. If you're an existing Chart Addicts member, reach out to us. You get your first month discounted, but it's a high ticket coaching for serious traders. If you guys have been trading for years, you guys have some money set aside, and you really want to take your game to the next level, that's what we'll predominantly be working on in the back end of Chart Addicts. So it's a 30-day intensive program. If you guys are ready to, this is like, there is an interview process because we're not trying to accept everybody, only because we want serious traders only. If you guys take what we say and you apply it, we can almost guarantee that you'll be successful. If folks are going to take the information and just like ignore it and not take our advice into consideration, then we can't really guarantee any results. So if you guys are interested, we can put you guys on the wait list. We'll do the interview with you to see if you qualify. And if you do, you can get ready to change your life in only 30 days. It's 30 days intensive, which means it's daily. You tie your MyFX book to ours, you give us your investor password, and you trade along with one of our coaches. They'll give you real-time feedback to be able to get you on track, as well as apply specific adjustments to your strategy while you're trading so we can improve those key metrics. Those key metrics being profitability, average win rate, and average risk and reward. All right, so we're going to improve those metrics for you. Your overall profitability will improve and everybody's happy. So if you guys are interested in that, reach out to info@chartaddictsfx.com, info@chartaddictsfx.com, and just put advanced coaching program in the handle. Yeah, that ACP program is going to single-handedly build some of the best traders in the world.
What's the price difference on that from VIP?
Oh, there's no comparison at all. VIP is going to be more of like a community-based chat, and we're going to be doing stuff like this. You guys can come and learn directly from me. You guys can come and ask me questions just like we're doing now. The 30-day intensive coaching is like a high-ticket kind of coaching thing. It's $5,000 for 30 days, and then there's a 3-month follow-up period. So basically, that program is for folks who have been trading for a while. You've been in the VIP chats. You already have money set aside, and you're looking to go up to that next level. And so that's kind of what the ACP is for. It's $5,000, 30 days intensive, and then a 3-month follow-up. A follow-up means that at the end of every week after you do the 30 days, we're still going to send you a synopsis of your trading at the end of the week, as well as give you pointers on how you're applying the strategy and some things that you can do to get yourself back on track. So 30 days intensive, 3-month follow-up. That is the goal. Can you guys see my screen or no?
No, we lost your screen.
Okay, give me 1 second. Yeah, I'm honestly super excited to be launching the ACP because doing these streams, this is the highlight of my day or the highlight of my week, basically. If we are Like, as long as I'm here with you guys, I'm trading alongside you guys, I'm making you guys money. It's honestly one of the most rewarding things in the world. Because I know a lot of people, especially at the market open, they get very antsy. And us being able to slow down the pace, look at trades at our own pace, find only the best quality positions, show you guys how to enter and hold. That to me is the highlight of my day. But I want to produce genuine results that last for people. It takes about 30 days to rebuild people's habits or to rewire some habits. And the accountability aspect of trading one-on-one with someone is what we found to be the most effective. So that's why I'm really excited about ACP. It's like, I don't want to say that we can guarantee improvement, but we can almost guarantee improvement or your money back. Because we know at this point, there's only a few metrics that we need to improve on in order to get your profitability to double or triple or quadruple. And you don't have to go from, a 50% win rate to an 80% win rate in order for that to happen. Some gradual changes in some of these different metrics could have a huge impact on your overall profitability. And that's what we've really, really dialed down, which is what do we need to hit on? And specifically, how can we figure out what you're doing wrong in those areas? So all of our coaches, they're technically skilled. They understand how to do the technical analysis aspect. So they can look at the charts and understand your entries, understand your exits, and figure out why you're not making that much money. But on the flip side, it's very quantitative, which means we look at the numbers on MyFX book and we say, look, GU is losing you all your money. It has been your statistical biggest loser. Let's see if we can go ahead and cut that out, and let's see the gradual improvement in the numbers. And so over the 30 days, we track those numbers, and through those specific improvements, we have a huge benefit on the bottom line. All right, let me get the recording back up. Oof. So that first scalp entry would have been an excellent place to get in. But I'm confident that we get one more liquidity grab at the market open and we can re-enter. I would like to see something like this, like a whipsaw at the market open, which, as you guys know, if you've been trading with me, it's about to be the market open in 1 minute. We're going to see a massive whipsaw in either direction. And this will provide us a potential second entry, either at the 88.6 or potentially at 12,070.
Yeah, I like that entry at 12,070 a lot better.
For sure. It's a much lower risk, and you get that 3-to-1 risk and reward. Like if we entered right now, it's less than a 1-to-1 risk and reward. Right? This is the whole secret of the game. A lot of people want to rush into this trade because it's moving. People would rather be in a move. They want to catch a move more than they want to make money. Now, people, you don't get to live a lifestyle like I'm living if you're not making money. It's not about catching the move. It has never been about being in a trade. Your job is not to be in a trade. Your job is to make your money from the trade. And so if the option is getting into this negative risk and reward trade, okay, 0.75 to 1, versus waiting for a better entry and getting a 3-to-1, I'm going to take the 3-to-1. Now, some people might say, well, Roy, what if the market leaves without you? That's fine. All right. If I really wanted to enter that bad, I would have entered the fucking 78.6. It says, Roy, Uncle Ted is on the YouTube streaming. What? You've had a massive rejection on the weekly. Be careful. Mr. Ted, appreciate you getting on, my man. I need to send you the Zoom link, but what are you doing on YouTube? Can't have Mr. Ted out here on the YouTube right now. Give me a second, y'all. Let me send out this link. And James was supposed to be on here too. But here's what happens when you stay up till 7 a.m. trading US 30 is you're not going to make it to the YouTube stream at 9 a.m. Ted, I just sent you the link on Instagram. Just a heads up.
Roy, can you go like to 15 minutes on that chart?
On Nasdaq?
Yes.
Yeah, let's do it.
Can you measure that move to the upside? The
From down here,
No, the most previous move. Yeah, that
this one.
Yeah. From wick to wick. No, from the the recent move. Internal move. Yeah, there you go. That was a quick scalp I took on right just now, 78.6
Oh, for the longs,
for the
back
long.
up to the highs. Yeah, yeah,
Yeah, yeah.
yeah. I mean, the way I look at this, if we're really gonna get down here and scalp, it's really simple. These are the highs and lows. The safest trade to take would be as close to the structural high as possible.
Right
So
up
if the
there.
market wicks up at the market open, retraces, we can catch an entry from up here and then just short it back down. The thing for me is I love looking at Nasdaq on the higher time frame. Oh, you also have this nice trend, but I love looking at Nasdaq on the higher time frame because I just feel like it's a lot cleaner. At the market open, we're gonna get a whipsaw.
That's it. That's your whip. So yeah.
So this thing looks like it's gonna fill bearish, but if we give it 10 or 15 minutes, we might find that this creates a wick, creates a massive push to the upside, and then at 1270, this is where we're gonna get our short.
I like that.
So I'm just gonna give it probably 20 more minutes, allow this candle to form, and then this candle will give us the answer. So like a lot of people look at me and they assume that I'm predicting what's gonna happen next. Really, like if I just play if then scenarios in my mind. If this candle closes bullish, then I will wait for an entry up here. If this candle breaks this low, then I'll wait for it to get down to the bottom of the zone and go long from here. So for me, I don't really know which way it's going to go and I don't really care, but I know that I have those if then scenarios with a plan A and plan B. So regardless of which direction it goes, we can catch it.
Gotcha.
Now I am kind of seeing it like if we do catch a short, I don't know if it'll make it all the way to the bottom of the range. Maybe it'll get caught right here at the trend line. Previous area of structure right here, previous area of structure right here, previous area of structure right here. The market might get caught making a higher low and then just come right back to the top of the range. So what I will do is once I catch the entry, as the market reaches these structural levels, right? The fib levels and the top of this trend, that's where I'll take partial profits. I'll take some money off here, take some money off here, let the rest ride and break even anything below that zone.
Damn, bro, I'm in profits on that.
On the longs?
On the longs, bro. So this is the way I see it. The 15 minutes, right? If you go back to the 15 minutes, see that move that I'm have you measuring, the most recent move, I think is gonna stand out to your entry. So yeah. So if the extension will go like to the -27 or -47, and then boom, it's just gonna short right up there. So
I like this one.
Yeah, that right there.
Oh yeah.
Yeah, that right there. That's what I see. That's where I take my shorts. I'm about to book partials on my longs, bro. Let me take a screenshot of this one.
It's looking good, dude. It's looking good. I'm getting ready to short here soon.
US 30 is coming to the 500 area.
Jesus, I'm gonna show you my entries, bro. I went ham when I just loaded that shit up.
All right, everybody, trade at your own risk. Past profits do not equal future success, and risk management is key. My name is Roy Dunya, co-founder, CEO, Chart Addicts. We are on the Chart Addicts live trading stream. We have a few celebrities in the house. We have Mr. Ted Safranco in the chat box somewhere. And if this is your first time on the stream, welcome. As you guys know, we're going to be live trading, going through the recession watch, which is something that we've been doing at Chart Addicts, is monitoring this actively developing recession, showing you guys how to navigate it and giving you guys some tools and tricks on how to navigate market conditions with all of this volatility.
I shared my screenshot on the VIP chat.
All right, give me 1 second. Yeah, I think GJ is going to drop from here. Even though we're creating structural support, if we break through that 158 zone, I really feel like we can fill a lot of this area down here. Just a quick, because I know someone just texted me about GJ. Oh,
Just like setting
oh,
stop loss to break even. That's all.
oh.
Dude, that's a damn candle, dog.
One last thing that I need to check is, I know we have a lot of dollar news this week. So preliminary GDP came out. Again, GDP, size of the economy, we're either growing or shrinking. Looks like we had a 1.5% contraction in the economy, which means we shrank instead of grew. That's not good for markets. Unemployment claims, they did come out a little bit lower than expected. We were expecting 217,000 new jobs to be added to the economy. We only had 210,000, which is that's not off at all. Or sorry, this is the amount of people applying for unemployment benefits in the previous month. And so they were expecting 217,000 new applicants. Instead, we only had 210. This is the one that's the most concerning, is negative GDP growth. We're in a bunch of debt. The economy is in shambles. The only thing that can help us out of this economic stage is for growth to come back into the economy, for productivity to increase. And with negative GDP numbers, the chances of us going into a recession are getting higher and higher by the day. But I don't see anything from the Fed today, so I think we're going to be okay. And
It's
then
close to our area, Nasdaq.
core PCE. All right, let's get
So
back to
US
business.
30.
US 30, personally, I'm staying away from. I'm not really liking the way that this candlestick looks, but Nasdaq is right at entry. So what I'm going to do is I'm going to start to scale in. I'm going to enter my first position, which is about half of my normal position size.
That thing looks good.
So I just entered a short position on Nasdaq at 12,028. I'm at a bit of drawdown. My stop loss is set 12,150, which is about 125 points. That's about 1,200 pips if you guys are trading a different contract size depending on your broker. The risk and reward for this trade right now at that current entry is about a 2.5 to 1. Closer to a 2 to 1 if I close those profits early. All right, so there's two scenarios that can happen. We either get a follow through here, the market rejects and starts to close below the structural levels previous to it, or the market violates outside the zone, and then in which case we can wait for it to crash back in and then short the retest at the same exact price level. So scenario one, scenario two. I don't normally trade this early after market open. It's only been 10 minutes after the market opens. And so if this first position doesn't work out, I'm still going to take one more before we finish the stream, and then I'll be able to make my money back. So here's the beauty of risk and reward. If you guys are risking 1% on this trade, or whatever you're risking based on your account size, and you're looking to go for 2 or 3%, it's okay if you lose a trade because the next one's going to make up for it. Now, I know it's not ideal. Obviously, we want to be winning trades, but yeah, I mean, sometimes at the market open, it's at a structural level. You take the chances of shorting it back down. If it works, it works. If it doesn't, and you were early, don't miss the re-entry. A lot of traders get discouraged after the first loss of the day, and then all of a sudden, you're not in the right mental state to take advantage of that follow-up trade. And most of the time, the follow-up trade is what makes you the most money.
That thing's about to drop, I think.
We'll see. Yep, so I'm in. I'll show you guys my entries.
And gold is getting to my limit too. So I have a buy limit at 1840.
Yeah, that thing's pretty close, bro.
Mm-hmm. A little bit, just a little more.
I'd be very careful with a buy limit on gold right now.
I think, yeah, I agree. You know,
Look at the weekly. So if you go to the weekly structure, last week's candle was a fake out to the upside. We have a massive rejection right now. There's not enough liquidity for the rest of the week for gold to flip. So you're going to get a lot of momentum now to the downside. You'll also find as we come towards the end of the month, we're going to probably complete that push all the way down. The US right now is obviously manipulating gold to keep China and Russia out of the way when it comes to superiority in the world and currency dominance, because obviously we know that the US dollar is losing its dominance. The Saudis, Russia, Iran, and China want the US dollar depegged from oil. So that's the reason why gold continues to drop, even though we have record inflation and all these recession numbers coming in. So just be very careful.
Ted, do you think once we clear up the situation with Russia, that gold is over time bullish, or is it just
100%.
dependent on what's happening with the economy?
100%. Right now, gold should be at about 2,200. But you're not getting that because obviously the US doesn't want Russia, because Russia, who has the most gold reserves in the world, Russia and China. So they don't want Russia and China gaining superiority in the economics, because then it destroys the Western world. So that's why we're getting this massive manipulation, and it's going to continue this way until they can sanction Russia or knock them out. But it's tough. I don't think they're going to get anywhere. And if China goes after Taiwan the way that Russia went after Ukraine, there's going to be bigger issues.
Way bigger. That one sounds like a problem that America might actually get involved in.
Yeah, because of all the electronics.
Yeah. Well, let's hope that doesn't happen. But this has been extremely bloody. So is this like, Ted, from your perspective, is this institutions or is this governments, or is this just like hedge funds trying to get cash to buy up cheap assets in a recession? Why are people liquidating like this?
Well, I think it's twofold right now. The government's squeezing everybody right now. So the government and institutions are squeezing, obviously, the retail investor. They don't want anybody. So right now in market cycles, you're going to see right now from 2022 to 2024, it's going to be a massive bearish market. So we're going to have blood on the streets everywhere. It's going to continue that way because what they're trying to do is push everybody out. So crypto is going to go to basically bust. I wouldn't be surprised if Tether gets depegged within the next few months. And then what that does is that allows them to bring in the digital currency, roll that out. It pulls all people's assets like into nothing. So then what you end up having is reliance on the government, and that's where the government steps in and starts buying up everything that you have because you're in so much debt. Because right now we're coming into like a huge issue, right? So you're over leveraged as it is right now. Most people are over leveraged with home ownership, debts, and things of that nature. Interest rates are going to go up. It's going to squeeze everybody out. Inflation is going up, which then goods cost more, and that's going to crush the economy. So people are getting squeezed from both sides, and then you have the market crashing, which liquidates your retirement funds, any sort of savings you have. So now you're stuck, right? And then the people that all dumped all their money into crypto, they're all like, oh, well, it's inflation proof, it's recession proof. Well, no, because what they're doing right now is institutions are buying up crypto to dump that out, because that's basically an asset that they're just going to use as a liability to offset what they're going to gain when the market rebounds in 2024. So if you can hold,
okay.
if you can hold
makes sense.
up enough, I mean, obviously crypto is going to be around. We know that digital currency is here to stay, but what form it takes, that's the biggest challenge, and that's the thing that I'm scared of the most. Obviously, with UST losing its peg and Luna and all that losing its peg, that was just the beginning of the house of cards falling, because now everything's unstable, right? So BTC is probably going to go down to 20,000, maybe 17,000. That'll shake the market up even more. You lose confidence now in crypto. That starts to open up the books. Obviously, if you've read I think it's the New York District Attorney, they're going after US Tether right now because of the fact that they're not opening their books to show that they have a one-to-one.
Now, Tether's always been that kind of like gray area
Yes.
example, because they've never been transparent. They've
Yep.
had multiple banking issues around the world because they're not transparent about their holdings,
Yep.
whether they're actually pegging one-to-one or whether they took some funds and they're collateralizing like shitty assets. And it's, so at the end of the day, Tether is like the worst example, but USDC, for example, who's regulated by the US government, do you still think that has the same risk? Or are they all in the same basket, or is it case specific depending on the asset?
I think they're all in the same basket. The rationale, once again, is because of the fact that you have the US government, they're unable to, well, I mean, they do track crypto. So, I mean, anyone who thinks crypto is anonymous is stupid. They track crypto 100%, but they don't have control over it the way they want. That's the biggest challenge with governments right now, is not that they don't like crypto, it's they don't have control over it. And the same thing with institutions and banks, right? There's no one says I hate crypto. What they say is they can't control it, right? So you're going to run into the same situation that we've run into with fiat currency, with the gold standard, things of that nature. As soon as the government and the institutions get their hands on it and they're able to manipulate it, we just run into the same scenario that we've run into for the past 100 years, right? You're going to have big players just moving the market and they're just going to do whatever they want with it. And then, it's sort of like what you have right now with the way hedge funds run and the way that they market make, the way that they collect orders. I mean, the whole fiasco with Robinhood, with Citadel, right? It's going to be the exact same scenario with crypto that happened with Robinhood. Robinhood was selling their orders to Citadel. Citadel was paying Robinhood hundreds of millions of dollars to collect those orders. Those orders weren't going into the market. Citadel was market making. And then when they had that whole GameStop fiasco and institutions got slammed by the diamond hands, what ended up happening was Citadel paid back all the institutions basically their own money, because Citadel bailed out that other institution that lost billions betting against GME. But the problem was Citadel was market making, so that institution didn't lose anything. Citadel just basically gave them back their money.
Now 0.72, they still have to pay back, or it wasn't 0.72, it was what was the name of it? I forgot the name of the fund, the one that lost all the money. They still have to pay back that loan, right? Or was it just like a cash bailout?
I look at if you watch Billions, I mean, they're all friends, right? So it's more like, well, whatever, pay it back when you want.
All right.
Because I mean, basically that was the perfect example of market manipulation at the highest level, where institutions got screwed over. And then they complained to their parents, which is the government, and the government was like, "Oh yeah, that's not fair. Let's go over to the school and yell at the principal." Right? But that's essentially what happened. If you look at this, institutions are like these rich kids from like down the street, and as soon as they got bullied by the actual kids that run the street, they called their parents, and their parents came in and said, "Well, we're not going to donate any more money to the school unless you fix this." And then so right away, those kids are in the wrong again, when technically they were doing exactly what institutions do on a daily basis. It's just institutions didn't realize that you could crowdsource hundreds of thousands of people, and everybody all together went, "Hey, let's do this."
Okay, I'm looking, if the candlestick closes up, this is just a side note, Ted, for the folks at home who are in this trade. If it closes above these highs right here, so let's say 12,070, if we have a candlestick closure above, then on the next retracement back down, I'll be starting to close my order. All right, just wanted to give you guys a heads up. We wanted to see a wick rejection off of this zone. If the candlestick continues to push bullish, we'll probably have a bit of bullish movement for the day and then continue the trend either next week or or most likely next week.
Gold just push 80 pips, bro.
Yeah, so gold, you have a range between 1840 and 1858. I have support at like 1846. Today we took shorts earlier this morning on the drive down. But it, like I said, it's very, very choppy right now. So you have a lot of discussion with the Fed going on, and that's really ranging gold. And you know, you had that massive pullback again in like a 5-minute candle, which is somewhat scary with gold. And I think that's the challenge when you trade gold. And I've stayed out of market opens with gold right now. And even because normally what I'll do is I'll trade like the 8 a.m. open. I've even stayed out at the 8 a.m. open now. I've started to shift because if you notice, the algorithms are starting to shift as well in the markets. And what was happening 6 months ago at a certain time isn't happening anymore. They've shifted like about an hour. So right now, as an example, like 9:30 usually used to get like a setup to then have the continuation of the move for the rest of the day. And now what's happening, it's usually happening at like 10:30, 11 in the morning.
Yeah, have you noticed
seen
like
that.
around 10, 10:30, that's where
Yes.
the reversal or the actual
Yes.
direction, yes.
Yes, exactly. So a lot of people getting punished that way, but that's, you know, like to Roy's point, is that's the whole point of, you know, adjusting and really reacting to the market, like having your ideas and planning them out. And I just noticed that too. So like, because I've been trading now every day for the last 2 years. I've just done a challenge for myself because I was bored, and I've noticed that too, because the shift starts and then you can gradually start to see it. And then when you pick up on it, then you're like, okay, I don't want to be in the market at 9:30 a.m. I don't want to be in the market at 8 a.m. I want to wait till like 8:30, or I want to hit the market at 7:15 to 7:30. Like I want to catch parts of the market where you don't have that much manipulation, where the algorithms haven't turned on and they're just like, they're obviously on, but they're just continuing their process, their trend. Where here at 9:30, you saw it dipped all the way to like 1840 basically, and then it ripped all the way back up to like 1846. You can't trade that. It's next to impossible. I mean, you can catch one side, but then if you're trying to swing it or you're trying to hold a little bit longer, you just get ruined, right? And that's the challenge with a lot of people is, you know, you have a small account and then you look at this and you're like, well, I could only get like 10 pips or 15 pips or 20 pips from gold. It's like, yeah, sometimes that's what's going to happen because of how choppy the market is. This is going to continue obviously until NFP. And then obviously with the Fed comments next week as well. It's just, you have to get used to that. And I think that's one of the biggest challenges with new traders or traders in general is they expect to come to the market every day and grab, you know, their quota, you know, quote unquote, but it's not possible every day. And you have to be aware of that. And if you are, life becomes easier. You know, you can, you know, you aim to have a positive activity or a positive outcome every day in the market. I think that's the biggest thing to live by as a new trader. Just have a positive experience. It doesn't mean you have a win or a loss. It just means, was your experience positive? And what you do is you take away from that is you say to yourself, okay, you know, did I trade according to my plan? Did I mark up my charts properly? Did I execute according to what I want to do? If I didn't see my strategy or my plan play out, did I stay away from the charts? And that reinforces positivity and confidence in you that, hey, you know what, I did things according to what I was supposed to do, and I traded without emotion, but I traded with pure logic. And I'm comfortable with that, right? Because you may not get a position every day, you may not get the greatest entry or the greatest exit, but was the outcome positive? And then how do you reinforce that and how do you continue? I think a lot of people, need to really focus on that aspect and not so much, oh, what's your risk to reward? How many pips did you get? What do you risk on this? Where should your stop loss be? Like, those are technical aspects of trading, but those are minute details compared to the greater scheme of things. Because if your mind is broken and you're not in a positive mindset coming into the charts, or you're not confident, who cares about risk to reward? Who cares about how much money you have? Who cares about the size of your account, where you're placing your stop loss? You're already at a disadvantage. So you should always aim each day in the charts and every day you're trading to have a positive outcome. You have to come up with something positive from what you did. And if you can't, that's when you go back and you retool and you say to yourself, okay, I had a negative day today. Why did I have a negative day? Was it, my trading? Did I break my plan? Did I do this? How do I regroup and how do I come back to that? And it's not, well, I took a loss, so this means it's a bad day. It's like, well, no, it's only a bad day if you don't understand why you took the loss. Because if you understand why you take the loss, you can make sure you don't replicate it. But if you don't understand why you took the loss, that's the bigger issue.
That's crucial. Ted, I love what you just said. I think we do need to open the conversation in the trading world where like people need to judge their success in trading based on like, did you just understand what you went through? Do you understand the reason why you won or lost? And are you happy with the decisions you made versus were you profitable or unprofitable? I think that once we start to shift that definition of success to following your plan, being disciplined and learning from each mistake, I think that a lot of traders are going to start to see progress. Because that's the one thing I fought for a long time in my own trading, which is that self-reflection piece, because I was always trying to cheat the system. And then eventually when I started to have that self-reflection and I took away something from every trade, that's when trading it stopped feeling like the push and pull of euphoria and sadness whenever I won and lost. And instead I was back in control of my own happiness because I can control my decisions. As long as I can control them, I can make the right ones.
It's 100% that. And I think a lot of people miss that element. And it's because you're looking for validation, right? So the first thing people do is they say, hey, look at my trade. It was really good. Or, they start to make an excuse why their trade was really bad because they have to validate themselves to somebody else. And if you can remove that self-validation and you can say, hey, listen, this is the process that I'm trying to do. This is the journey. And I'm taking a step each day in a positive direction, you're going to see the results. But people don't attack trading that way. They look at it from a very cut and dry thing where it's like, and this is where you have all the arguments on the internet about is, you had a 1-to-1 risk to reward, so that's bad. Well, sometimes that's all you can get. It doesn't mean that it's bad. It doesn't mean no one intentionally goes out to say, I'm going to have a shitty trade, right? Like nobody tries to do that. And everyone gets persecuted for that. And then what that does is it casts judgment on your own ability where it's like, sometimes that's all the market could give you. Like, don't worry about it. Like you did the best you could with what you had in front of you. Not, well, you didn't trade according to the Bible of Instagram or the Bible of these traders. And that's the biggest flaw in most people's trading is they don't trade according to market conditions. They trade according to a book or a box of rules. And sometimes you're just not going to get that. I mean, you go to the gym one day and you're repping 185 or 225. Yeah, some days you're not going to get 10 reps. You're going to get 8. Does that mean you failed? No, it's just sometimes that's just what happens with your body. You might be a little bit more tired. Maybe you didn't eat enough the day before. You didn't have energy. Like there's so many variables. Like don't crucify yourself because you didn't achieve according to this set of rules that you made up because somebody gave this to you and said this is the only way that you could trade. Like be flexible, but look at the fact that, did you have a positive outcome with the day that you traded today? Like you're trading right now, you provided analysis doesn't go the right way. That's fine. You said it yourself. You're like, hey, if it doesn't do this, we're not taking a trade. That's a positive outcome. Like it's not a waste where other people say, well, you're wrong. It's like, well, no, he wasn't wrong.
I mean, look, at the very end of the day, like I've been streaming for so long that I know that a lot of folks might not be happy. A lot of folks might feel some kind of way when analysis doesn't go their way. Yeah. I feel like at this point in my trading, I understand the probability game. And when I take a trade, I'm not taking it because I know it's going to win. I take it because it has a higher probability of winning than losing. And I'm willing to accept the probability, whether it's 70, 80, or 90% chance. And if it doesn't, that's the risk that we involve ourselves in. And if you guys are trading with us, this is why risk management is key. If you risked a specific percent of your account here, and not only did you risk that, but you also accepted the financial risk of this trade, I don't think anyone should be feeling some kind of way emotionally. Now, the folks that didn't actually quantify the risk that they were taking, and then they didn't emotionally accept that risk, I feel like those are the individuals that tend to get emotional when the trade goes their way or doesn't go their way. Does that make sense? It's like It's that rationality. It's like before you enter the trade, that's when all of the, you have to kind of accept the situation that you're in. You have to accept the risk and the probability of this trade not working. And if it works, it works. If it doesn't, it doesn't. Now, the next trade we take is going to make up for the loser, because we're going to be looking for a 2-to-1 or a 3-to-1. And so if we lost 1%, the next trade's going to make it back. And that's how the majority of my trading is, Ted. My win rate is, 58%-ish, 62%, but the risk and reward always makes up for it.
Yeah. And then see that's the benefit of your style. Like I have an 80% win rate, but I'm not trying, I'm not like, my risk to reward isn't always going to be 1 to 3. Sometimes it's just 1 to 1, but my strike rate is accurate. And I know that sometimes I'm not going to get like a 1 to 3 or 1 to 4 trade. I'm only going to get a 1 to 1. Right. And I accept that. So there's days where I only get like 10 pips or 8 pips, but then there's days I get 20 or 30, right? Like it just balances out. But I know based on historical data and based on my sample size of, I've got like 15,000 trades now, that I'm comfortable with that. And I think that's the other aspect of trading too, is people aren't really necessarily comfortable. I mean, I think, you put on a great event at the summit, and I guarantee you there's people there that have less than 6 months of trading. And then they're saying, hey, look at my strategy, it's working. And it's like, stay in the market for a couple of years. You'll see how much you have to refine your strategy, or, don't be so hard on yourself because you haven't found, what works after 4 months of trading. Like, people think because they've shown up to the charts every day for a month, or they've done, 8 hours of back testing on the weekend, that suddenly now they're ready to go. And it's like the farthest thing from the truth. It's like, yeah, you have a great head start, but you're going to find there's a lot of nuances in the market, and there's a lot of things that you're going to experience in the market live that are way different than a simulation. And you have to go through 1, 2, almost 3 years of market cycles for you to be really comfortable in the market. And this is a journey. This isn't like a sprint. But I think that's the other thing. I just wish people realize that, like, man, 6 months of trading means nothing. Like, you've traded for 6 months, and if you're profitable, congratulations. But if you're not, like, that's not the end of the world either.
But here's the misconception: is a lot of people think it takes a long time because they think they need to learn something specific, that holy grail that's going to put everything in perspective. Yeah. What you're describing is really the market cycles shift so much that you have to get humbled by the market enough times to remind you that your strategy might work in certain conditions, but as soon as the market cycle shifts, you're going to have to stay adaptable. And that, I think, is the experience piece that people want to skip through. They feel like they just want to learn that piece of information that's applicable to every cycle and every market condition. Yes. They can use it forever.
Yeah, 100%. And I think that's the biggest challenge as a retail trader. I mean, for the most part, people are coming into trading. Like, I had a guy message me the other day. He's got like 9 million followers or something like that. He's some, I don't know, influencer on Instagram. So he messages me and he says, hey, I want you to teach me how to trade. I said, well, I don't really teach people anymore, but tell me why you want to learn how to trade. Like, just, I want to hear you out. He says, well, I want financial freedom, and I want to be able to save my family, and I want to be able to just live a great life. I'm like, sorry, I can't teach you how to trade. And he got offended, because I'm like, that's not the answer I'm looking for. Because you can get financial freedom, you can help your family, you can do all that stuff without trading. You could do another job. You could open up a business. You can do, you can become successful in an organization. You can do everything you want for financial freedom. It doesn't necessarily have to become trading. The answer I'm looking for is, I have a passion for this. I love numbers. I love strategy. I love the markets. I have, I've been following the markets. I really enjoy what I do. Now I'm looking to try and use my knowledge and learn about the markets even more, right? Like, I don't want to hear people say that I want financial freedom. You can get financial freedom from so many different avenues. It doesn't have to be trading. When I hear that, I already know that you're in it for the money, and that's going to crush you, because you're not going to make the money right away. You have to be passionate about this. You have to want to wake up in the morning at 6 a.m. and really enjoy trading, sitting there for 3 hours and just watching the market move, going, well, I guess I had no trade today. Time to go on with my day. Not, oh man, I didn't make money today. I need to find a trade. If I don't find a trade, I can't pay my bills. Like that's the mindset you have to have. You have to be able to want to do this when it sucks, right? You probably went through this for the last year. You built a conference. It took you a year to do it, and there were nights where you're like, what am I doing? Like, why am I even doing this? This is killing me, and I don't think anyone appreciates it, right? But you're passionate about what you do, and you do it, and then you see the end result and you're like, okay, it was worth it, right? But there's nights where you have doubts, there's obviously issues or challenges, and but it pushes you through because you were passionate about it. You weren't doing it as a, hey, I'm going to make $100 million running this conference, or I'm going to be the best person on social media now. Like, you weren't doing it for that reason. You're doing it because you genuinely enjoy what you do. And that's where people have to be when they're learning to trade. If they don't genuinely enjoy it and they're just trying to make money, you're going to fail.
Okay, so that's an area of contention, because I've always thought that you don't necessarily need to love the game in order to be successful, because you can build a mechanical system at the end of the day. But do you feel like people are not going to apply that mechanical system if they don't have the passion? Is that kind of what you're getting at?
You're not going to have the dedication that you need. You're going to assume that you can be on autopilot. Right. It's like, look at all the top athletes, right? You look at Tom Brady, you look at Kobe Bryant. There's all these stories. He was in the gym before everybody. He was leaving the gym before everybody. Did he need to do that? He was already good at what he did. He was already the best. But it was no longer like, I'm the best. It's like, now I want to be better than myself each day. Like, there's a passion there. He didn't have to do that. He still would have made the money. He still would have played just as well if he didn't show up at the gym in the morning, didn't stay later, right? It's like Tom Brady. Tom Brady's won 5 Super Bowls, whatever, how many Super Bowls he's won. He still shows up and he's like, I want to still play. He's not doing it for the money anymore. He's not doing it for recognition, right? So that's
the difference between good and great. You would say, is that the greats
100%.
not only just go through the motions, but they also have that passion that's going to allow them to do more. Okay, so like they don't, like, you don't need to be on the stream, Ted. And so I guess that's the difference between good and great, is that just like by you being out here interacting, giving back, I feel like that kind of just shows that passion, the difference between someone who's just doing this for a cash grab and someone who's really involved in this game.
Yeah, no, I finished trading this morning. I finished trading, I think, at about 7:45 or so. And well, actually before that, but then I watch everybody's streams. I go on everyone's streams, and people always like, is that really Ted? I'm like, yeah, it's me. Like, I like doing it. I watch your stream every time you streamed on Thursdays. I always watch it. I don't say anything because I don't like when people deflect the attention to me afterwards, because then everyone starts asking me questions. It's like, no, it's not my stream. It's Roy's stream. It's Don's stream. It's Raja's stream. Like, they're the guys that you're talking to. Like, they're just as qualified. Like, don't bother me. I come in as
just
an
as qualified. Ted, you're way too humble for your own good.
No, but
you're way too humble, guys. Ted is that guy. All right. I have my own knowledge. I have a unique skill set. I have a strategy that I consistently practice. But when you're on these streams talking, this is your stream now, Ted. I'm just a student. I got my pen out. I'm listening.
Yeah, no, but I mean, like, I just like to come in and I mean, that's how I've always viewed the community. I like sort of, because I don't have, and I know this about my own abilities, is I don't have the commitment to do a live stream. People ask me, they're like, hey, do a live stream. I would love to do that, but I'm not committed to that. So I know where my weakness is. It's my commitment to opening this up, running this kind of thing, having this, because this takes a lot of commitment, right? Like, that's why I always give credit to those people that do these live streams. You don't realize how hard it is to be committed to this process and showing up every day, because you're doing it for free. You're not, like, obviously YouTube pays you whatever the percentage for views or whatnot, but that's not your goal.
That's not real money.
That's not real money at all. You make what, up $500, $1,000 is nothing, right?
I wish.
But the idea was, it's like, you're out here doing this because you genuinely enjoy what you're doing. And for me, I didn't have that commitment. So that's why, like, I really happy.
I mean, you also have your hands full, Ted.
Yeah.
Let's be completely honest. Like, you're frying bigger fish. And so if there's a place for you to put your attention to, whether it's streaming or kind of focusing on the responsibilities you have, I could see why you're not streaming.
Yeah, but I mean,
You got some things on your
that's
plate.
why I appreciate when people do stream, and that's why I like to come and watch the streams, because I like to see what people are doing. I learn a lot from the different streams and like just different aspects and ideas that people present. And then, the community is also very gracious. Everyone's, very cordial with people. So like, like you're like, hey, I'll bring you on, and like I'm honored to come on because you're giving up your time to have a discussion with me, or you're allowing me to give my insight, and you don't have to do that, and that's well respected. And I wouldn't be offended if you were like, it's my stream 100%. No, but you have to look at it from an objective point of view. It's you're doing this and you invited me in, and I come in, and people always get pissed off. They're like, oh, Ted talks too much or whatever. But
no, if we're being pragmatic,
yeah.
it's like everybody here is getting more knowledge than what they're paying for at
Right.
so-and-so group. And so all you're doing is coming on here and adding an incredible amount of value. If anyone has a problem with that, then they'd be a fucking moron.
Well, yeah, and
Like,
I mean,
you
I
gotta
always
be
laugh
coachable.
about that. Yeah, exactly. And
You gotta
I
open up
laugh
that
about
opportunity.
Yeah, but like I said, I watch everybody stream every morning. I go on streams. I don't even know the people. I just like to watch. Like, it's just interesting to hear people's vantage point, hearing where like the context of what people are talking about. That's what I enjoy, because this is only like a couple hours of my day, and then like I'll go on and enjoy the rest of my day. Like I'll go to the gym in about 20 minutes or so. I'll go work out, and then I have the rest of my day filled with different things that I'm doing. But like I genuinely enjoy listening to people talk trading, and I like like people who are passionate about it, like yourself. You guys have a group here. There's other people that have groups. You have multiple speakers. It's entertaining, right? And I think if people have that passion, there was a couple of streams I was on today. There was a trade. It was like a 5-minute trade, and then after that, there was nothing. Like they were just talking general, charts and just different topics about trading. But it's like people have to have that passion, and you want to be able to do that all the time.
That, I think, is what makes our community good, is just because we're going to do this regardless whether we're streaming or not. Like me, Stefano, Gali, Joseph, everybody who's on the stream, we would be doing this ourselves. And so the fact that we're just opening it up and making it live, that's why I don't know. That's why I feel like it does come natural, because we would be doing this regardless. It's not like we're like, all right, we should do a stream just for the sake of doing the stream. It's like we're going to be doing this either way.
Yeah,
Now,
I think Raja did that too, like back like in 2018 when he started doing that. Like we were already doing our own little Zoom meetings in the morning, and he's like, hey, like let's just do a public. And it was the same thing, right? And you start off with like 10 viewers, 15 viewers. And I mean, now when he comes on, he's got like 4,000.
20K views on these things, dude.
Yeah, and it's a combination of putting in the time, putting in the work, but then people look at it and they're like, you get people come in and say, oh, like he makes whatever, all these streams of income. But it's like, yeah, you weren't there when it was like only like 5 viewers. We were still doing this thing with 5 viewers, right?
People in our industry don't get 100,000 subs.
Yeah,
like that is impressive. No matter what you're doing, it's a lot of fucking work.
It is.
So
and
whether you
have to
like
respect that,
the trading style or not, like it's a serious hustle, it's a commitment, it's a sacrifice to get on date, because he was doing it daily. I do this shit once a week, Ted.
Yeah, and that's
like,
what I said, and I was always happy. Like, and it's the same thing in this scenario too. It's like he would always invite everybody on to speak, and there was never like, oh, you can't talk about this, or I don't want you on there. Like he was always inviting people, and he still does to this day, right? So like I always hats off, like I say, to the streamers, because you guys are the ones setting everything up and allowing other people to come on. Like it's not me setting up my own stream, right?
Well, we'll keep doing that. That's kind of that's the motto. We'll keep doing that. We'll keep creating a great place for folks to come and collaborate, as long as you guys are willing to come and share what you have.
Yeah,
we'll put in that work.
I think it's super important, and I think a lot of new traders have to start getting that mindset. I think it's been good because the community has shifted a bit. I wouldn't say it's fully healed, but we went through like dark periods where there was a lot of egos and there was a lot of like attacking, like people, because it was one of those things. And I remember when we did our podcast like 2 years ago now. People weren't cohesive. Like people were trying to find themselves, and it was like almost everyone was trying to create an identity, and people didn't realize that you can have an identity and you can still be friends with other people. You can still work with other people. You can still collaborate, and you'll still maintain that same exposure. But everybody was like, and to a degree it still happens, but people are always trying to chase like a customer or a client, and they're not realizing that there's so many people out there that want to learn FX. You don't have to tear other people down. You don't have to insult other people. You don't even have to talk about other people. You just have to do your journey, and you're going to collect the reward from that. And I think in 2022, I've seen that change now, where like people who I didn't see collaborate together or weren't really talking with each other, now they all talk to each other. Like it's not like, hey, well, let's work together, but it's not like, but it's more of like, I don't need to step on your toes, or I don't need to feel a certain way about you. I go about my business.
For sure. And hopefully the conference showed people that collaboration is going to be more fruitful, whether your intentions are strictly business or your intentions are community. Collaboration is always going to be more beneficial, especially in the long term.
Oh, 100%.
And that's what I'm trying to get people to realize slowly. But there's always going to be folks that have their kind of are living in their own world.
Yeah.
And so regardless of what's happening around them, they think that everything revolves around them. And that's just like, that's the toxic part of this industry.
Yeah, it is. But like I said, it's gotten better. I've noticed that, like, it's gotten a lot more cohesive. There's a lot less drama. Like people have found their place, and they realize that, hey, if I put out good content and I'm there, people will come. Like I don't have to try and chase people. I don't have to, do something to someone else or tear them down, because I remember like 2018, 2019, like everybody was attacking everybody. And it was just like, this is insane. But now like we're in 2022 and it's like everyone's getting along. It's like, you put on a conference, you got like a whole bunch of top traders sitting on a stage. And I remember we talked about that, because I've always thought about that too. It's like, man, you get all the best traders from around the world to sit on a stage and just sort of talk, or have a Zoom call or something where people can learn. I mean, it's huge. I mean, you don't have to really divulge your secrets or your sauce if you don't want to, but just the idea of interaction and trying to talk with people. I mean, it's a great feeling. I mean, you see that, and you obviously saw that in Miami. It's like people just were there just for the environment and for the energy, right? They even if you take away one thing from like 3 days, like it's huge. It's a huge value, right?
For sure.
And I think
guys,
people
put
need
it in
to
the
realize
chat.
that.
Put it in the YouTube comments and the Zoom chat if you guys want to see Ted speak at the 2023 FX Summit. Put it in the chat right now.
He should have been on this one that we had.
Trust. We don't trust that we tried.
Yeah, we tried. It's just I have it's not anything negative, but it was just more so I was just protecting myself, not in a bad way or a good way.
No, but I really appreciate you, Ted.
Yeah.
Words of advice before the conference started, it went a long way just in terms of how we thought about it. So thank you. But I guarantee that next year you need to be on that stage. Okay.
Well, yeah, I have a couple of things going. If it works out over the next month or so, yeah, I'll come in there in a different capacity.
Yeah, the YouTube comments are going crazy.
From a retirement standpoint, not so much from active, but I'll come there as a sort of tribal knowledge.
Oh my God. He said, I'm going to come out of retirement for the conference. No, it'll be awesome, Ted. Yeah. People would fucking lose their minds seeing you up on that stage. I'm just going to throw that out there.
Yeah, no, I know. And I don't like the limelight. Like because I feel as though people hang on every word you say, and that's a lot of responsibility. And my concern always is, you get like one or two people that you speak to, and it's like, they really hang on your words. And I don't want people to hang on my words. I want people to use them, but apply them to their own situation and realize that my situation was totally different than anybody else's, or like your situation is different than mine, and I just want people to understand that. And I wish I could have like a waiver signed where people would say, hey, like I just want to hear the journey, and I want to understand, and I want to be able to apply some of the principles to my life, to my trading. And I think that's super important, where, because I think when you're young, you want to look up to somebody. And I get this all the time. People are like, oh, you're my inspiration. It's like, man, you should be your own inspiration. Like, don't look at me as inspiration. Look at me as somebody who did something and be like, hey, I know somebody somewhere in the world that's doing that I want to do. So there's a possibility that I could do it. Where it's different, right? Where like right now, if you wanted to go to Mars, nobody's gone to Mars yet. You'd be the first person to go to Mars. So it's daunting. But when you see other people trading and other people doing things, it's not as daunting because it's like, hey, I could do that, right? It's like you see people dunk a basketball and you're like, hey, that guy's 6'4". He dunks a basketball. There's a chance for me to dunk a basketball. Doesn't mean I'm going to do it, but I could do it if I put the work in, right? Because he's the same height as me. So there should be an opportunity there.
I think that's the beautiful thing about our industry is that we can use our power to basically, or we can use our influence to basically like build our ego or to be an example for people. And being an example today means not every day is a winning trading day. Well,
Yeah.
the day's not over yet, by the way, people. There's one fucking trade, but not every trade is going to be a winner. And how you deal with that emotionally and how your perspective shifts based on winning and losing, that's something really important that people can learn. And they'll be like, well, look, if Roy can sit there and lose a trade in front of Ted and not panic because somebody that he respects is on the stream and he just lost the trade, maybe I can, stop bitching about losing 5 pips on EJ by myself. And hopefully that example goes a lot further than just like, some words that we can throw out. We can actually lead by that example. So I think we have a good purpose in this industry just to do that. But here's what I see right now on Nasdaq, just to kind of go through it. We're still on a downtrend. This is the most recent high of structure, and then this is the most recent low. And so as long as we create a lower high somewhere up here, we can still continue this downtrend. So I'm looking at 12,400 to 12,500, this 100-point region right here between the 78 and 88.6 fib. That's where I'll be looking to take a second entry. It's already coming up on like 10:30. It is the few days before the monthly candle closes. We might end up consolidating here for the rest of the session. But I do expect that 12,400 or 500 to get reached by the end of this week. So this is where I'll be looking for the next short positions. Now, the momentum is bearish. So if you guys are trading on the smaller timeframes and you want to look for some momentum trades, you can wait for price to pull back to this area of support around 12,050. Expect a wick to go through the zone. So don't just start entering at that level, having tight stop losses. You will get smacked. But if you're willing to wait for the price to liquidate through that zone and to close back above, you guys can take long positions at 1250. So either shorts at 12,500, or you guys can wait for the violation and recovery above 12,050 for longs. So we're playing in this new range. Make sense? Now, one thing I did want to get you guys, I did want to talk to you guys about before we hop off is recession watch. I want to give you guys an update on what's happening with the recession, where we're at just in the overall timeline, and some things to watch out for to indicate a worsening or an improvement in the situation. As you guys know, the way that I do my fundamental analysis is I don't try to predict too much. Like everyone's trying to predict these days whether the Fed is going to raise rates or they're not going to raise rates. The reality is nobody fucking knows. But if you build multiple scenarios, you can be prepared whichever direction it does go. So the language I want you guys to pay attention to from the Fed is if they say that inflation is still running out of control and all their efforts aren't helping, that means they're going to continue to slow down the economy. So when you guys hear language like, we're doing all this stuff to slow down the economy, but it's not impacting inflation, right? All the stuff that we're doing is useless, then we're going to start to see the markets continue to short, because it shows that we're going deeper into this recession because the Fed's not going to step in and save the day. Now, if the Fed starts to use language like we are closely monitoring the economic situation to see if we can continue to raise rates, that's when you know that they're slowing down. And so they don't go from raising rates all the way to printing money. There's a transition period. The transition kind of sounds like we're actively monitoring the economic situation. Then they'll say something like the economic conditions do not support an additional rate hike. They start to use language like that. And then they come out and say, we're not raising rates or we're lowering rates in order to stimulate the economy. That is how the shift happens from the bearish market we've been seeing since January over to the new market cycle for the next 6 to 8 to 12 months. So that key language is what you guys should be looking out for when you start to hear the Fed backtrack on all the stuff they're doing in the economy now to slow it down. That's when you realize they're going to start printing money again. And money printing has a direct correlation with a bullish stock market. All right. If that made sense, put something in the chat. If that was complete gibberish, let me know. So that's basically what we're seeing. I've described this before, but the current recession that we're seeing for the first time ever is not an American-led recession. It's not Wall Street leading it. It's not the American consumer. Everything on our side is actually pretty healthy. We have a bit of a labor shortage in America where we still have 13 million open jobs, about 2.5, 3 million unemployed people. So there is like a bit of a disconnect between how many people are unemployed and how many people are looking for jobs. But other than that, all of our economic numbers in America are healthy. Savings rates are actually pretty good. Consumer sentiment is pretty high. And the only issue that we're dealing with is a supply chain crisis. That's what's been leading to most of the inflation. Obviously, the Fed printed a shit ton of money, but our inability to get food, resources, energy across the world, that's what's leading to a rise in prices in oil, food, and some of like the important consumer staples. So the recession is going to be a European started recession. Is going to lead to some of the undeveloped nations, and then it's going to spread to Japan and Europe because of their monetary policy. It's going to hit America because we're going to have to pay more for cars because Germany is going to tax, due to the economic situation in Europe, they're going to tax on all car exports. Japan's going to tax on all car exports. Korea, since the geopolitical conflict there is escalating between North Korea, China, and South Korea, South Korea is going to start to charge on their technologies, chips, cars, and everything else. And so as the increase in prices from the supplier side gets higher, consumers will start to pay more, at the very, very end down the line. So that's kind of how this recession looks. We are not in a bad place as a country. The banks are extremely healthy. The Federal Reserve makes the banks put a certain amount of cash aside as capital reserves in case this shit happens. And so our banks are solvent. And if the stock market drops below a certain point, the Fed will start printing and recover the market. So remember one thing, we are one Fed meeting away from a V-shaped recovery. We're one Fed meeting away from the market bouncing back up and in anticipation of the Fed printing again. So at the very, very end of the day, USA, I think, will kind of like sideswipe this whole recession. Europe will get hit the hardest. And so they're going to have to move on to the digital euro system sooner than the rest of the world. So I think by 2024, Europe is going to have completely transitioned over to a digital euro system because the physical euro will have gone to trash. Okay. That is the recession. Now, what do you guys do? There's two big themes happening. There's high inflation, which is the rise in prices, and there's a devaluation or a debasement of the currency, which everybody thinks are the same thing. They print money, prices go up, inflation. Inflation really is just the rise in prices in goods and services. Debasement is the overprinting of your sovereign currency and devaluing that currency. So what I want you guys to pay attention to is to protect yourself against those two threats. How do you protect yourself against inflation? Is you buy assets that hedge against inflation. So I don't want to recommend any specific assets, but myself personally, what I buy for inflation resistance is Bitcoin. Bitcoin is programmed to be resistant against inflation because the supply of it is reduced over time. And because the supply is reduced over time, the demand naturally goes up and up. And so it guarantees a price curve for it because of the limited supply. So that helps me fight inflation. Now, what helps me fight debasement of the currency is not holding cash. Okay, debasing the currency means you're losing a certain percentage of your purchasing power every year. And so how do you protect yourself against debasing the currency is you don't fucking hold the currency. And then you hold assets that are priced in that currency. So your house right now is worth 300K. But once we keep devaluing the currency, it's going to take more of those dollars to buy the same house. So now your house by default is worth 380 or 400. Is it because the house is worth more, or because the denominator that you're using to value the house has become debased? And so you want to buy things that are priced in dollars, for example, like homes, art, expensive watches. You could do stocks, but stocks, they might not keep up with inflation right now. Bonds, trash. Cash, trash. Speculative, high risk, high beta assets, trash. Currencies like the dollar and the pound, not trash. The dollar losing 7% of its value this year, a little bit trash. So you guys have to think about it like this. If you hold $100 bill or let's say $1 million, let's make this real. If you're holding $1 million, you're about to lose $70,000 in purchasing power this year for not doing anything. Just by letting the money sit there in cash, you would lose around $70,000 of your purchasing power. Versus if you put it in Bitcoin, for example, right now Bitcoin's price is at 29 and the price goes up to, let's say, 38. From 29 to 38, don't quote me on my math, that's probably what, 20, 30% increase, whatever it is. So you're either looking at a plus 20% increase, or if let's say you made 5% on your stock portfolio, but you lost 7% with inflation, your net is actually a negative 2% real rate. And so I understand that Bitcoin has much higher risk than the American stock market. American companies are not going anywhere. However, if you guys are just looking at the returns, holding cash is only going to lose you purchasing power. Holding bonds yielding 2 or 3% is going to lose you purchasing power. It's going to lose you money. Holding anything that doesn't make you at least 5 to 7% a year is going to lose you money. So then you want to start looking at assets that are going to actually yield a return. And so, Ted, I know you were describing the dynamic of a lot of institutions dumping crypto, but what I actually think is going to happen is when institutions look around and housing stops giving them yield and bonds are no longer providing a yield and the stock market is no longer providing a yield that's good enough to compete with inflation, they're going to go to the crypto market for the only yield that they can get, even though there's a higher risk there.
Yeah.
That's where I feel like the institutional money will flow.
Yeah, I agree. The only challenge is, and this is the one I've had from day one since like 2017, is, like, do you remember Netscape, the web browser?
Yeah.
Okay, where is it today?
Same place as AOL.
Right. So that's my challenge. I don't disagree with the fundamentals of how crypto will work with institutions, but what I fundamentally disagree with is that the crypto we see today is going to be here 5 years from now. And that is what I warn people of, is not that, crypto is good or crypto is bad. It's just right now we're in the Wild West, right? We're like in pre-1982 days. So for people that don't understand that, what I mean by that is if you watch, what's the movie? Not Wolf of Wall Street, the other one.
Big Short?
No, the one with Michael Douglas and Charlie Sheen.
I know which one you're talking about.
Yeah. Money.
Wall Street.
Yeah, Wall Street. So that
savage movie.
Yeah, but that time period was a time period of the Wild West in the stock market, because you were able to front run, you were able to manipulate, you were able to do all these things, and people made oodles of money, right? Like that whole premise of that movie was insider trading.
Ted, is it, a lot of that's still happening. A lot of front running is still. That's why they buy order flow, right?
100%. I mean, but there's rules now, right? Like it's sort of like when you look at like when the police bust a drug deal, right? They don't bust the small guy on the street. They bust the big one. Why? Because they have to show the general public that the police are doing something. Right. It's the same thing with the SEC. The SEC busts the big fish. So the general public is like, okay, the regulator's doing their job. But we all know, anybody that is in finance in today's world, that crap is happening all around all the time. I mean, think about it this way. You could trade with a dark pool, right? So your counterparty could be a dark pool. That's the official name of a counterparty, a dark pool. Like, think about that for a second. The name, it's like dark pool of money. And you're like, what is it made of? Well, we don't need to tell you that.
We don't know. Yeah, we don't know. That's the whole thing.
So like, how is that even legitimate when it comes to finance. The whole thing behind finance is transparency. You know, you do accounting, you see the numbers, you understand what's happening, and then you're like, oh, I'm going to trade with a dark pool of money, and you know, we're just going to have fun with this, and you know, I'm going to make money. So it's the same thing with crypto, right? So you look at crypto and you say crypto is right now in the Wild West. It's in the 1982 phase of the stock market, where people are making millions, and people are obviously losing millions, but you know, there's millionaires coming out each day with the crypto market. And I say to people that have done that, you know, like the NFT phase, the pump and dump, the ICO phase, all these different phases, is like, take that money and run to the next project. Like, don't sit there and hoard it thinking that you're going to make millions every single time. But it's like, you know, like you said, if you're going to buy BTC and BTC goes to like 60K or whatever it goes to, it's like, scale out, put some money aside, because you know this isn't going to last forever, and regulations will come in. It'll change the game. So take the money you can and run with it. Build your empire while you can do anything you want at this point.
Ted, this is a little bit before my time, but I am curious about this, because you're using the example of, let's say, like the AOLs and some of those companies that didn't make it, the Netscapes. But then what about like the IBMs and Ciscos that are still here today? The individuals that had invested in Microsoft or Apple pre-dot-com crash, they're sitting on the largest return on investment. So what do you say to those folks that are like, well, what if Bitcoin's the next IBM or Microsoft or Google in this space?
Well, I mean, but once again, you're guessing, right? So like I said, I'm not saying that there's anything wrong with that. What I'm saying is don't hedge your bet on just the one asset. Like, who knows? Bitcoin could be here. Bitcoin could be the Microsoft. But even then, what came out after Microsoft? Google. Google eclipsed Microsoft. Apple eclipsed Microsoft, right? So like when we think of like those kind of scenarios, it's like, yeah, Bitcoin's here, but what if something comes out that eclipses Bitcoin? It doesn't mean that Bitcoin isn't going to be somewhat stable, but it's just more of the fact that, like, hey, you know, don't think that you've missed the boat. Like, don't think that you've missed this entire crypto run.
People are early. People are early for sure.
But what people are doing is people are getting FOMO because they're like, oh, I need to get into Ethereum. I need to get into Solana. I need to get in. And it's like, man, just sit back and wait. There's going to be something that's going to come out that's going to be adopted by, you know, government, by this, by that. And we don't know that we don't even know it exists yet. Like, we don't know where it's coming from. So you're going to run with it.
The craziest thing I heard is when I asked Dr. Olson, the founder of Awanda, I asked him about digital assets, and we had the same conversation. He said that 99% of the assets that will exist in 5 years don't exist today.
Yeah.
Because he's talking about the digitization of all of the contracts that we have today, like mortgages, like your car note and everything else.
Yeah, 100%.
So I could definitely see that the next technology that like aggregates all of our car insurance data, that's like the next big thing, and it hasn't come out yet. I see it. I just kind of feel like there has to always be an industry leader, right? Like, everybody here knows what the industry leader in electric vehicles are. Like, everybody here knows who the industry leader is. So if you had to like close your eyes and throw at a wall which assets to buy in the EV space, you'd probably go Tesla top of list, right?
Yes and no.
Not because they will be around.
Yeah.
Well, maybe at today's prices.
Yes, I mean it's yeah, but I understand. I understand that aspect of it. I'm just saying for people, because like, look at it this way: the average person here probably has, you know, like, I want to use an example. Like, you have $100 to your name, right? And you say, okay, you know, Ted and Roy are talking about crypto. I need to invest $100 in Bitcoin today. And what I'm trying to tell people is, take $10 and invest $10 in the Bitcoin and stay current with the space and start to engage and learn about the space to stay ahead of the curve. And when stuff comes out where, you know, you have something that's like at a ground floor, you have another $10 to invest in the ground floor of something.
Completely
right?
agree.
And,
I completely agree.
Because what people are doing, and I know what people are doing at home, you know, like I always say at home because people are on the stream, is, you know, they hear Bitcoin, they hear all this stuff. It's like, okay, recession proof, I have to do this. And it's like, you don't put all your eggs in that basket, because you don't have to, because you're still early with adoption. There's going to be greater opportunities where, yes, Bitcoin could probably go up, say 500%, right? Like, there's no doubt. Like, I mean, there's an opportunity, but there will be something that'll go up 5,000%, and it will be because you're going to get in at that Bitcoin price when Bitcoin was at, like, you know, pennies.
For sure. The thing is, that's the risk game. And so
Mhm.
Bitcoin for me has become that sort of safe asset. It's kind of like buying the biggest name. And then those speculative assets, there's higher risk, higher return, obviously.
Right.
But like even institutions now, they're using Bitcoin as a safer asset. Because if you look at real returns, if you have a certificate of deposit, like, I used to work at Merrill. If I had a client with a certificate of deposit who was yielding 3% a year, but inflation's at 7%, that person's losing a real rate of 4% a year on that investment.
Yep.
So then the institutions are going to look at Bitcoin and say, look, Bitcoin might not go to 500K, but even if it goes back to 60, is that a better percentage yield than, for example, putting it in certificates of deposit or bonds or treasuries or anything else? And so I don't know, maybe institutions will want to take that risk, but I guess we'll just have to see.
Yeah, I mean, there's no doubt institutions will, because I mean they have the book to do it, right? Like institutions, their whole name of the game is hedging risk, right? They can afford to do whatever they want, right? Like you think about it, like if you look at like ARK right now, ARK is taking a beating.
Yeah.
But they're like pro like EV, pro like crypto, pro everything, right? And it's just they're in the wrong cycle. But it's like
Kathy's always early to the game. That's kind of her philosophy. It's like she's always looking around the corner. If you guys don't know, ARK Investments or ARK Capital, I forgot what's the official name. They invest in speculative long-term bets, things like autonomous driving, things like biomedical sensors and things like that. And so their bets don't play out for a long time. And so Kathy always looks like an idiot until she's a genius.
Yeah.
That's why I always give Kathy Wood the benefit of the doubt, because the last thing you want to do is like judge Kathy Wood for her book, and then all of a sudden in 3 or 4 years you're not holding any of like the neurotransmitting technology and she's holding all of them. So I always try to keep my eye out on what she's doing. For crypto, I go to the largest fund today. So Grayscale is the largest public holding company for crypto, and they released their balance sheet of what they hold. So they'll tell you live assets under management, and they'll also tell you the documentation of exactly what they're holding. And so quarter to quarter, you can see if they're dumping a specific asset for something else. And you can see sometimes they're shifting their portfolio in terms of dominance. So they were Bitcoin dominant. Now they're Ethereum dominant, to where the majority of their portfolio is in Ethereum. So I kind of watch companies like this because, like, let's be honest, they're the real bag holder. $20 billion under management just in crypto assets. They're the ones who are really supporting that floor. So just in terms of crypto side, I look at Grayscale. In terms of forward-looking investments, I kind of look at ARK. I'll look at some of the larger funds like Tiger Global and what they're investing in, and some of the venture funds.
Yeah, I just like at this point, I think we're in a pivotal point in the world, and a point in economies as well. Is the whole financial sector is shifting, and I think there's going to be a lot of people that are going to get ruined. And I think if you can hold what you have in terms of just maintaining stability, you end up then making sure that you're able to fight in the next round where like everything rebounds, because I really think that we're heading into probably a deeper recession than what people expect. And I think capital conservation right now will come in handy, where you'll be that person. It's like back in 2008, right? Like I remember 2008, I was sitting at my desk and I was watching everything crash in front of me, because like we had I think there was a few companies like Raymond James, and I think Charles Schwab, things like that, like we dealt with on a daily basis, and they were just taking a beating in the market. I watched stock drop from like $20 down to like $7 in a day. And we were just all sitting at our desks going like, are these guys going to be here tomorrow, like for us to work with? And it'll be the same thing, I think, now in in 2022 and 2023, is like we're going to go into a deep hit, but then the recovery phase is going to be huge. So you'll have that opportunity there. So it's just a matter of making sure that you're properly capitalized.
So that's basically what you're saying is folks need to have cash on the sideline to buy the dip. Like don't burn all your ammo early so that you can't,
Yeah.
take advantage of the bottom.
Yeah, 100%. I think that's the thing, and I told this to people a lot too. Is and this is sort of how I trade. Is I don't like to catch a falling knife, right? Like it was funny. I talked to a guy maybe a few months ago, and I just reconnected with him like the other day, and I told him, I said, don't buy BTC until it goes over 40K. And I said, what you need is for BTC to go over 40K. I said you need a strong rejection down in like the 30s, and you need to drive up like on your higher time frames, like on your weekly time frame, or even if at that case it was the monthly. And I said that's where you'll have it. You'll be able to move. And he said, why? I said, because BTC could drop more. And I said, think about it this way. If you're going to hold BTC long term, right? If you're saying, okay, I think BTC is the ultimate in crypto and it's going to go up forever after this. Like, what's the difference if you get in at 20K or you get in at 40K? Where
Well, it's a huge difference.
Not
Percentage
really.
return wise.
Not really.
If you go from 20 to 60,
yeah, but
the
I'm
300% versus from 40 to 60.
Yeah, but what I'm saying is I'm saying from a long-term perspective. Right? Do you want to burn yourself now on the chances of getting in at the bottom, or do you want to just take a safe ride and ride it up past like 100K or 200K?
I'm with you on dollar cost averaging. I'm with you on, since we can't guess the bottom, like as it's falling, try to get a little bit at different prices. And then at the very bottom, like if this thing actually does break below, like if it comes down to like 19 or 18, that's when I'll actually go to my margin account and I could trade it on MT4. And so what I'll do is like for my actual, I won't say cash account, for my Bitcoin, like my spot account, I'll be dollar cost averaging as it drops. But if it goes below a structural level and I'm like, okay, this thing is about to whip all the way back up, then I'll margin trade it. Yeah, that's kind of how I'm looking to take advantage.
Yeah, see, like for me, I'll load up on BTC at like 35K, 40K once it dips. Like I don't care about catching like the 20Ks or the 17Ks, because at that point, if I believe that Bitcoin is going to go to 100,000 or 200,000, I'm not worried about the 20,000 or $10,000 I missed on the rebound up. I'm more concerned about the fact that I didn't have to worry about the fact that it could drop more.
They could drop more.
Right. And that's what I tell a lot of people, because a lot of people don't have the flexibility to invest. Right. So we're looking at like the average investor that has, like $1,000 or $5,000. And the first thing they come up to me is like, Ted, should I invest in Bitcoin? And I'm like, no. Right. And then they say, well, why not? Everybody else is doing it. Right. Like the biggest top for me was my mom and her friends were talking about Bitcoin.
That's when you should run. So when you're, when the Uber driver is trying to give you advice and saying like, don't sell your Doge, don't sell your Doge. Now, Ted, over 50% of the names in the Nasdaq 100 are down more than 30% right now.
Yeah.
So you can look at some of the biggest names like the Airbnbs, Intuit, Lucid, Netflix. Netflix has had the biggest drop, 70% from high to low.
Yeah.
Now, do you see this personally? I know that, we're not giving any financial advice, but personally, do you see this as an opportunity in the market, or do you still feel like these names could go even lower than this?
Well, so my whole issue with Tesla was like, and I mean, I own Tesla and I own Tesla's share. Like I drive 2 Teslas and I own Tesla stock.
Right.
Is I like it for the technology, but I never liked the company for what they actually do in a general sense, right? And what I mean by that is Tesla's rarely delivered on things that they've promised, right? So let's people argue this now and they say, well, they produced all these cars. It's like, yeah, but they've also promised you a whole bunch of other stuff that have never come to fruition. The solar roof barely got off the ground. The power bank for your house barely got off the ground. The Roadster that I put a deposit on back in like 2018 never showed up. The Cybertruck that everybody got pumped and dumped on because everyone put in $100 and that truck's never showing up.
Ted, what happened with the Roadster? Did they end up giving you the Model S in exchange, or what happened?
No. I basically my dealership told me at the time, they're like, don't put a deposit in. We don't know when this car is coming. And they told me, they're like, hey, we'll call you as soon as we have confirmation from the head office that these are rolling out. We'll get you in. Don't worry. Because I've had 2 Teslas from the same dealership. So they were like, yeah, don't worry, we'll help you. And it was funny. These guys are, most of the service guys at that dealership were day traders and crypto guys. So all I did is retire and brought my car in, that we just sat there for 2 hours and talked about crypto and day trading. But yeah, it was the same thing. And then like the Cybertruck, they rolled that out and they told everybody to put, $100 deposit in or $200 deposit in, reserve your space. Where the hell is that? Right. And then you look at like a Ford or, a GM or Chrysler or, Mercedes or whatever big car, they show you a car, it rolls out on time, basically. Like if you look at the differences, and then people say, well, it's Elon, right? Like it's Tesla, it's different. But you have to evaluate the car industry all the same way, right? He's delivering on cars. He didn't do what he said he was going to do. So the reason, and then you look at Tesla shares dumping, and it's like, yeah, it's like, it's going to get worse because he's done a lot of innovative things and he's produced a lot of vehicles, but there's an overshadowing of his inefficiencies and just his own human nature of like, hey, I want to be on Saturday Night Live instead of actually making sure that my deliveries are on. Well, like, think about it. You're the CEO of a company. You've promised people all these different things, and then you're on Saturday Night Live doing some sketch on Dogecoin. I sit there as an investor and as an owner of a Tesla vehicle going, what the hell's wrong with you, dude? Like, I want my car.
Completely agree. Can I play devil's advocate? I 100% agree with you. Elon's biggest problem is making promises that just honestly are unrealistic.
Yes.
And he's never going to be able to put up with.
Yeah.
Now, in his defense, I feel like being a public company and having $1 trillion valuation made him put up these shorter time frame targets in order to keep the public markets incentivized to stick around.
Yeah, I agree. Yeah.
But he could never actually deliver. So I feel like once the rent came due, so to speak, and he wasn't able to deliver, that's when they punished him with all this.
Yeah. But
because the $1 trillion valuation was too forward looking.
It was.
One wants to wait 15 years for that return,
Yes, and it was, and I really think that like if we go into like the deeper end of the swimming pool with this, is he was put up there by the deep state to sort of like, because you think about it, right? He's like the Tony Stark of our generation, and the deep state needed millennials to believe in someone. So who do they believe in? They believe in Elon Musk, but now he's a wolf in sheep's clothing, because what has he done? He's pumped and dumped crypto without getting in trouble. He's created magical coins that have done nothing. People have been shilled out of their money because of what he said. So like, think about what he's done. Like, how much good has he done compared to the bad now? And now he's bought Twitter, or he's trying to buy Twitter or whatever he's doing with it. And he's saying, oh, I'm going to change it. And it's like, are you? Like, where's your track record? Like, you scare me. Like, it's great that you tweet funny things and you're that guy, but like, your track record for execution and actually doing things, it's a little off. Like I said, like, I mean, you're a CEO of a big company. You have to deliver. You can't just make excuses and be like, oh, well, yeah, we had problems with this. It's like, well, why did you tell people it would be ready by like September of 2019? Like, don't even say that. Say this is a concept car, like what the big 5 auto manufacturers say. Like, you go to a car show in Detroit or wherever, this is a concept car. We hope to have it delivered out. A lot of concepts don't make it because it's just not feasible. But Elon consistently said, hey, this Cybertruck is going to be great. And how many changes have they gone through? They've gone through like 7 iterations, because they had problems with the windshield wiper. They had problems with the side mirrors. They had problems with the back cabin. They had problems with the way that the car was moving. Like, there were so many issues with it.
I feel like any company that's forward looking like Tesla needs to be a private company, because private companies have time to work, and they're never really rushed to make these irrational claims like, oh, we're going to roll out full autonomous in 2 years.
Yeah.
Like, you're in these rooms, Elon. You know that you're not rolling out full autonomous in 2 years.
Yeah.
But I really feel like the pressure from the public markets creates a lot of irrationality. So things that have to do with biomedical engineering, things that have to do with cancer research, things that have to do with autonomous driving and reducing carbon emission, those should be either government subsidized, because then they have an endless bank account to keep innovating, or they should be privately held, because private holders have a longer time duration than like quarter by quarter analysts. So I really feel like if he went private, he would be able to get a lot more done. That's just like a giant assumption on my end.
Yeah, I think I agree with that as well. And I think the challenge then becomes he has to actually like just take a step back and focus on one thing. Like his whole like going to space and doing whatever he's doing. It's not it doesn't make sense. Like, I mean, he's stretched himself thin, and like the whole SpaceX thing, I don't agree with what he did with SpaceX. I don't think that we should be worried about space travel when we should be worried about what's going on the planet first. Like, how many people are actually going to get to space? Like, like I look at the benefits versus, you know, the time and costs consumed, and you look at that and you say to yourself, okay, well, what's the benefit of space travel? Like, are we actually going to colonize another planet?
No chance. I feel like the individuals like Elon, and even though they're saying they want to do all this stuff, you know, on their time here, what they're really doing is laying down the framework for somebody to be able to create a rocket for $1 million as opposed to 100 million. And so by creating the infrastructure around it, I feel like they are allowing the next generation, and maybe we find a better use case to go to space other than colonizing a multi-planetary species. But I feel like them building the infrastructure makes it so somebody like me, we can go invest in a rocket company for $10 million on a reusable rocket, as opposed to the barrier for entry being 200 million, just because of the innovations that they're doing now with all these, you know, all the problems that they're facing.
But what I'm saying is, do we need that innovation? Shouldn't we looking how to make better food, how to protect, man, like all that other stuff?
Bill and Jeff got the stuff here on Earth. Let Elon deal with Mars.
I don't trust Bill as far as I can throw him. He's the biggest cult member.
It's either that or the Koch brothers. Which one would you pick?
Yeah, well, I mean, they all seem to be a little off at this point. I mean, Bezos is taking growth hormone like crazy. The guy looks like he's trying out for the WWE suddenly. Like, I guess Miami got to him. You know, he got the Miami teeth, the Miami growth hormone. You know,
I guess the best of us.
Yeah. So I mean, it's just funny because when I saw him with his shirt off, I'm like, wow, it must be nice to like take all that testosterone and like steroid and everything.
I mean, when you've reached every level of the game, you're like, well, now I'm going to become a physical superhuman.
Yeah.
And I think it's because his wife left him. He's like, all right, now I'm back in the game. I'm going to bulk up a little bit.
Yeah. No, I don't know. I think he's an interesting character. I mean, I don't have a read on him too much, but obviously with Gates and Musk, I don't trust him as far as I can throw both of them. Bezos, I still have to do a little bit more research on. But yeah, no, it's an interesting time in the world. Let's put it that way, and we'll see how things progress as time goes on.
Ted, this has gone longer than I normally stream. I'm not complaining, by the way. I fucking love this conversation. I do want to ask you one last thing before I get you off. Is in terms of brokerages, can you give advice to any of the folks at home and what they should be looking for with the platforms they're trading on in today's environment?
So I think with brokerages in general, I think we've come into that new world where everybody's opening a brokerage and everybody's, you know, trying to tout that they have the superior brokerage. Let's just level the playing field. Everybody uses MT4, MT5. So you all have the same execution. For the most part, there's only X amount of liquidity providers around. So for the most part, everyone's using the same liquidity. It's really going to come down to, you know, the relationship. And I think, you know, with brokerages, the biggest gap, and it still is to this day, is, you know, customer facing service, the relationship you have with your clients, not treating them like a number. And I think as a trader, you should be demanding that. Like, don't fall for the fluff of like, oh, we have the best execution. We've worked over the last, you know, 5 years to produce the best platform. It's like, no, everybody has the same. Like it's all the same now. And what differentiates a good brokerage now is the relationship and customer service. Are they making sure that your environment's fair? Like, do they listen to your concerns? You know, if you have a challenge with a trade, are they addressing the challenge? Like what is happening there? Because like you can go on 10 brokerage websites right now, like if you were to open them up on your browser, and you'd see the exact same lingo. Like, you know, like I said, fast execution, we work for the client, trusted and trustworthy, and you know, like honest brokerage, you know, this, that, and the other thing. It's not, and what it is now, it's not so much where the brokerage is domiciled, because obviously there's advantages to regulation versus unregulation, but it's now more so like, who are you working with? Like, do you know the people that are running the show? Like, you know, how's the customer service? Are they getting back to you? And if you don't get that vibe, you should not be working with that platform. And that's basically what it comes down to, is like, you're going to see every brokerage offers you the same thing. It's essentially, who do you want to work with from a relationship standpoint? And I think that is what the biggest challenge is. And I think for people, you know, everyone always asks me, they're like, well, how do you open a brokerage? I tell people, don't open a brokerage. Open up supporting tools. Build supporting tools that you don't see on your current brokerage and license those to brokerages. And you'll make so much more money with no risk. You know, because opening a brokerage is a lot of risk. You need clients, you need volume, you need to continuously peddle your wares, you need to do a lot of work, and it's an ongoing operation. It's continuously moving. It's like a juggernaut. You have to continue that. But if you were to create something where you're like, hey, I really hate the way MetaQuotes operates. I hate the fact that like it has poor execution. It slips me constantly. It does this. I don't like the way that it does this. It doesn't have these tools. And you were able to build something where you were able to integrate that and say, hey, this is a better platform to trade off of, and license that to brokers, and you can pick up on that, and you're charging a licensing fee per user or whatever. Man, you'd make millions easy. And because right now,
you taking notes?
Because right now MetaQuotes owns the shop. They own everything. MetaQuotes is the dominant player in the market. There's no one else.
Yeah.
Like C-Trader is there, but you know, they're not as, you know, prevalent. But if you could build something that executes better than MetaQuotes, because I've said this from day one, and I know the owners of MetaQuotes, and it's like, your platform's crap.
Are
Like
they real? Do they exist? I thought it was a bunch of sketchy Russians, man. Are they real?
Yeah, they are real. It's just crap. It's absolute crap.
Yeah.
Like and people blame the broker afterwards, right? Like you'll blame the broker, like, hey, I got slipped like 6 pips or 5 pips. It's like, it's not the broker, it's the execution. Because MetaQuotes was never built for proper use. Like, so when you look at book depth, right? So if you trade, right, and if you say you traded on like if you're trading equities, right, as an example, you would see book depth, right? Because you're in a centralized environment. So you would see your levels of book, where like if you wanted to buy a share of Tesla, you want to buy 1 share of Tesla, it'll cost you $5. You want to buy 100 shares of Tesla, it's going to cost you like $6. Why? Because you have a bid and an ask, right? Because you're obviously buying more, so there's a demand. So the demand's going to go up, it's going to raise the price. So you're not going to get 100 shares at $5. It's going to cost you more to buy 100 shares. It's the same thing with trading, right? When
does it have to be that way, or is that just a function of today's design? Because there are no fee exchanges, not in the Forex space, but in the crypto space. And so market makers have the ability to create a no fee environment.
There's always a fee.
So are the spreads that are built in, is that a function of necessity, or it's a function of choice depending on the provider?
Well, it's a functionality because you have to pay to play, right? So your broker is paying liquidity providers a fee to get that feed, right? What you're doing is your spread, this is the thing. Spread is basically you're paying your liquidity provider to say, hey, make sure that I can fill this position. And the liquidity provider is saying, yes, if you pay us this amount per trade, we're going to fill your position. Now, The secondary notion to that is, what price are we going to fill that position at? that's always the variable, because that's where you get the slip, right? You're like, okay, well, yeah, it's like game of cat and mouse, because you tell your liquidity provider, yeah, we'll pay you, $1 for every time you fill a position. And they're like, okay, but you didn't specify what kind of
What the
fill you wanted.
execution?
Yeah. Right. Oh, you wanted better execution. Okay, now that's $3. And you're like, whoa, hold on a
Whoa.
second.
Yeah.
You said it was $1 for fill. No. We will fill it for $1, but we won't tell you where we fill it.
So
Right.
is that a function of the broker, the liquidity provider, or MT4? Who's really making that decision?
So the liquidity provider is making that decision for you. MT4 doesn't give you enough information on that decision, and the broker's stuck in the middle going, what the hell's going on? Because MT4 should show you book depth based on the aggregator that the broker is using, but the MT4 doesn't have the functionality to connect to an aggregator to allow you to have book depth, so that if you opened up, say, your depth of market on your MT4, right? So if you go into that section where it says view and depth of market, you wouldn't have that, because there's no functionality there. It just gives you all the same prices, where technically those prices should all be different based on contract size, right? Are you doing 100,000 contract? Are you doing a million contract? Are you doing a $10 million contract? There's different levels, right? So there's usually like 6 or 7 book levels of contract depth. And what's happening is MT5 or MT4 doesn't pull that book depth, right? So you open up a 10 lot trade, and then you open up a 0.25 lot trade. Your 0.25 lot trade gets executed a lot better than your 10 lot trade. But that doesn't mean that the price is bad. It means at that given time, you weren't exposed to the book depth. So you didn't know that opening a 10 lot trade, if you had waited a second longer, you would have got a better price, because MT5 and MT4 don't support that. So right away, you blame the brokerage because the brokerage slipped your price. And it's like, no, there's no functionality to show you the actual price that you should be getting in. Like that's you've just played a play. Like I see that all the time. I open up 100 lot, 200 lot trade, and I get slipped like 6 pips all the time. And it's like, that's great. And I speak with my liquidity providers, and they're like, well, yeah, you didn't see book depth. And I'm like, yeah, we can't see book depth. I can see it on my aggregator. I can't see it on my terminal. And I said, it's a disadvantage to all clients opening large orders. So that's
only the owner of the platform has access to the info, is what you're saying.
Yeah, essentially, yeah. The people that run the platform have, because that aggregator is the one that you watch your flow. So you're able to then say, okay, we need more flow for this pair. So we have to shift our aggregator, because your aggregator is your pipeline, right? Your pipeline for flow. And you're saying, okay, there's a huge demand for this pair at this particular time. We need to make sure we have 7 providers doing this, because when a provider leaves, that's where you get those drops in prices, right? Like if you're pushing the book too hard, a provider will just leave. And that's the other issue that brokers have that you have no control over, is if there's a huge spike in volume, like in a high news event, that's why spreads increase, because the provider's like, I don't want to be part of this. You guys are going to destroy me. I'll close my book off. So now spreads widen, and then everyone's like, oh, I just got slipped like 40 pips. It's like, yeah, because everybody knew what was going to happen to the market. You wanted to trade the market, and every provider was like, we don't want to take those orders because we're going to lose.
So they're going to charge you a premium in order to trade the market during those high volatility times.
Right, because what they have to do is they have to now find someone to offload those orders to. And offloading those orders take more time in a high volatility environment than it does in a low volatility environment.
Because who wants to take all that risk?
Right, exactly. But see, that these are the education components that people don't understand when they trade, and then they start blaming everybody. And it's like, if you understood how the brokerage industry works and how liquidity providers work, you'd be like, well, I'm not going to trade a high impact news event because spreads are going to widen. Or if I put my sell stop or my buy stop above a certain liquidity area, I'm going to get activated because spreads are going to widen there because they're grabbing liquidity. It's just a function of the market. They're not stop hunting you or trying to take your money. It's a function of the market. You're placing your order where everybody else is placing their order, and institutions, it's not that they know this, but they work on price. They want the best price.
Don't institutions, when they get okay, I'm gonna have to ask you this on a podcast, but when they get order flow information, aren't they using that info in real time to front run orders and using high frequency trading orders?
Yeah, but they're not doing it to an effect that it's impacting your trade. Let's put it this way. If you're right now, gold is dropping, right? So if you're in a sell, you're winning. If you're in a buy, you're losing. Who are they going to try and pin off? Are they going to try and hit the sellers or the buyers, right? So like when people talk about manipulation.
If it's gold, probably both.
Yeah, but I mean, that's the thing, right? It's tough because people say, well, you know, the market maker is manipulating me. It's like, well, then someone else is taking the risk on the other side then. Like
Yeah.
there's always going to be a risk assumed there. And
Oh,
the issue is people don't understand that liquidity providers aren't taking your order and saying, oh, okay, you took a sell, I'll take your sell order, and then they lose. What they're doing is they're gathering all those orders and then they're offloading them to someone else again. It's a game of
yep.
hot potato. But
Yep.
people don't understand that. They're like, well, doesn't the broker lose when I win? It's like, no, broker doesn't care. Broker's an intermediary. That's a definition of a broker. Your liquidity provider takes on the risk. And when they take on too much risk, they just close their book. So there's no availability to trade. And that's where you get flash crashes. That's where you get like these widespread jumps and spread increases. But then what they do is they just offload those orders to people who want them, because there's someone in the world right now that wants a whole bunch of gold orders at 1844.
And so they will either drive the price to that level or wait for it to get to that level in order to execute their order.
Yeah.
Basically, like if you're JP Morgan holding $500 million of a gold order that some German company wants,
yeah,
you'll basically wait until it gets here or put a buy limit at this price. And then as soon as it gets to a certain zone, then you'll take it back up. Is that
what you're doing is you're saying, hey, once orders reach this area, I want to buy, 100 million ounces at this price, or, 1 million ounces at this price. And that's what drives the market. It just so happens that, we look at the market on a chart now and you visualize it, right? So you're able to visualize. So it makes it look pretty for the retail investors. So the retail investors is like, oh, there's a liquidity zone here. Like it's just where price is gathered. Like if you were just in a regular terminal, you wouldn't see this. You would just see price and you would be like, oh, price is here. I want price at this point, or I want price at that point. And that's all based on like sort of fundamental knowledge and sort of where the demand for gold will be based on what people are willing to pay, right? It's not necessarily the price involved, right? It's just a lot of education has to be given around the trading environment, not necessarily, hey, mark a support and resistance, or this is a supply and a demand, but it's like, how does the market actually work? And I think if people understood that, they would be more conscious of what they're doing, and they wouldn't be so quick to be like, oh, it's manipulation, FX is rigged. And it's like, it's not rigged. It's like there's a whole bunch of mechanics going on behind the scenes, and because it's decentralized and unregulated, this is what you're dealing with. You're playing the Wild West, but you know what?
Learn the game.
Learn the game.
Learn it. Don't try to fight the reality of it.
Right.
The best piece of advice you gave me, Ted, this was actually after our first podcast. We were talking off camera, and you told me that whenever I lose a trade, somebody won that same exact trade. And the perspective shift of asking myself, what did the people on the winning side see that I missed? That was one of the single biggest shifts for me back then. Because it kind of did get me out of that victim mentality of like, my fucking $1,000 is like they're watching my $1,000 trade, and then kind of thinking about somebody won this.
Yeah, there's someone out there doing something. It's like what I tell people all the time. It's like if I go to a poker game and I know 3 people are playing against me, I don't look at that. I don't look at that as a disadvantage and be like, oh, this is not fun. The game is rigged. I'm like, well, if I know those 3 people are playing against me, I have an edge now because I know what they're going to try and do. They're going to come after me directly. So how do I combat that? And if I do combat it, I win 3 times the amount, because there'll be a hand where I have a pair of aces and they're all trying to play against me and they're trying to push me out of my hand, and I have the best hand and they've all played themselves for fools. Right. So manipulation is exactly like that. It's like, if I know that they're going to spike gold up to 1850, I know that I can sit back and wait. And when it starts to drive down, I know that the daily candle was still bearish. It's going to be very hard for it to flip. I know that they're trying to manipulate me. So I can now take advantage of that. Right. Not, oh man, this is stupid. Like, why is it going up? Why is it doing this? It's like,
so you're putting yourself in the shoes of the people you're playing against.
Right.
So I guess like the conversation we had today, Ted, just to kind of wrap this up for the folks on the stream, it revolved around the people who are running this market and their motivations. And I think as long as folks understand who they're playing against, they can start to have a better idea of their motivations for moving price, and they can have an advantage as well. When people don't know who they're playing against, they tend to think that like it's other traders or it's the market sentiment or whatever, and they tend to be at a disadvantage. So guys, help me thank Ted in the chats for coming by and dropping all this incredible knowledge. If you guys are on YouTube, make sure to put it in the chat and blow it up. Show some love to Ted for stopping by. Ted, thank you for your time this morning.
Thanks, Roy. Yeah, no, thanks. Like I said, this is pretty off the cuff, but yeah, I'm just gonna head over to the gym now. Enjoy your
There
day,
we go.
brother.
Take it easy. I really appreciate you, Ted.
No,
We'll
no
stay in
worries.
touch.
Take care.
All right, everybody, if you guys are watching this stream, it's great to have every single last one of you guys on here. We did not catch that Nasdaq trade, but I will catch it later today. I guarantee that. Gold ended up hitting Stefano's TP. It broke back inside the range. And then now we're looking for a retracement around 1850 in order to short this thing back down to 1842. So 1850 is a re-entry for gold shorts. As you guys can see, we violated through that sell zone. We violated through the sell zone and then came right back under. As you can see, we had a massive wick, try to break out, then we closed below. So now we have a floor at 37, a floor at 40, and a ceiling at 50. So we're going to wait for a retracement of 1850, short it at 1850. Let's take a look at Nasdaq real quick. Nasdaq ended up going massively bullish. So we're going to end up shorting at 12,500, most likely tomorrow. For today, I believe we're going to continue bullish at least up until 12,350. If you guys want to trade this on the smaller time frame, I would try and find structure on the smaller time frame, just like this, where you can find support and resistance. I would wait for price to retrace a previous area of structure and close above. Then you guys can just trade with the momentum of the market. All right, so that would be around 12,180. And your first target would be 350. The market might just break above this current high, then in which case you would wait for the retracement of that high and trade the momentum. Now you only have probably 2 trades in this trend because the higher it goes, the more risky it gets. The closer it gets to our sell zone, the riskier it gets to go long. So you can either get on the higher time frame, wait for a higher time frame pullback and go long, or you can try and scalp the momentum on the way up, which is a bit more risky, but you can get a few scalps and get out of the market that way. If there's any questions, put them in the chat box. If not, take it easy. If you guys are watching this on YouTube, my name is Roy Dunya, co-founder and CEO of Chart Addicts. If you guys would like to come trade with us, you guys can come and find us at ChartAddictsFX.com. We're Chart Addicts on YouTube and at Chart Addicts on Instagram. Thank you guys for stopping by this incredible YouTube live stream. Catch you guys next week. Peace. All right, YouTube stream is now ended.